Good morning, everyone, and welcome to the European crossover webinar. And we are seeing the euro continue to remain a little bit under pressure here. Dollar index currently is at 93.51, still relatively weak overall, but we may see this start to work a little bit higher. We've also got equities just in a relatively tight range overall. Trump had signed an executive order over the weekend regarding unemployment benefits, but the constitutionality of that ultimately may end up getting challenged. So if that's the case, then they may go on and may not go on and play out, and so we may end up struggling here. Certainly hasn't been any much of a closer move in here between Democrats and Republicans. So. And we can go and take a look here quickly where we stand here with equities. And you can see here with the NASDAQ, we'd actually reached 127% extension before the, the index ended up paring back. And we did come into a range here, range or a zone, however you want to look at it, Friday. And you can see here that saw the market stabilize. Potentially in the morning when U.S. equities open, we could see the market try and come back in here. But once again, you have to factor in is that is there going to be a fight here as far as Trump trying to go in and sign executive orders to try and extend unemployment benefits through the first week of December. So once again, like I said, this may cause an area where they have some difficulty trying to get back up there with the thought maybe that we can't go on a whole lot further. We may be, unless the Republicans and Democrats come through or on an agreement, could see the market potentially going and stall. You can see it's already had a very strong run since March. Look at that. Obviously, even all-time highs. So potentially, like I said, my thoughts would be we might end up struggling a bit here as we come into equity open today. Take a look at the S&Ps also. Needless to say, they're up here in the stars also. And then, of course, with the euro, but this will be the 6E, the euro futures. Certainly, you've seen a decent little pair back. Same thing here with the cable. Cable, although, looks a little bit more in a better technical position than the euro itself. And crude oil, we mentioned the other day when we got that hanging man here and saw a pretty good little pullback, but we kind of been a little bit up and down at this point here. And then lastly with gold, pretty good strong run here. We may see a pause here if we run into some trouble with equities. That's certainly been the knee-jerk reaction with gold in the past. Although certainly there's a lot of things that are happening that are driving further runs into gold. Obviously, with interest rates so low, I think it was Friday, we had another record 30-year mortgage rate low. And then, of course, the sell-off in the dollar and a little bit of also geopolitical concerns. But really, it's so much being thrown at it that it couldn't help but stay up. But like I said, if we do go in and see a decent little pullback emanate eventually over time or in the short haul in equities, pretty decent chance we'll probably go in and pair back as the market has had a phenomenal run. But obviously, this is probably going to be a pullback that certainly will be bought. But once again, you'd have to think how much further can it move, especially if we see the dollar then start to go on and see a little bit of a rally back off of these oversold positions. As far as economic data today, none whatsoever. At the bottom of the hour, we do have the Eurozone Centix Index. Reuters polls for negative 15. So that'll be at the bottom of the hour. And then we've got nothing. So no data as we come into the States. So touch quickly on the news. The dollar struggles to sustain rally and eyes bond yields. The U.S. dollar was struggling to keep a rare rally going together on Monday as its longest losing streak in a decade left much of the market structure short of the currency and vulnerable to a squeeze on any upbeat news. Bears were caught out by a better payrolls report on Friday, which pushed Treasury yields higher into this week's massive $120 billion debt sale. Yet the dollar still ended lower for the seventh week in a row. Our portfolio has been positioned for a number of weeks now for a nearly weaker dollar as a consequence of the independent surge in COVID infections in the U.S. that has opened up a recent gap in near-term economic performance, especially against Europe, said analysts at J.P. Morgan in a note. Our positions have been concentrated in the Euro bloc, reflecting the structural improvement in the European policy framework following the agreement over the recovery fund. The euro edged up to 17.91 on Monday, having hit a high of 19.15 last week, which now acts as a major resistance. Support comes in around 17.55. Turnover was light with Tokyo on holiday and considerable uncertainty on whether U.S. policymakers can agree on a new package of fiscal support for the virus-hit economy. House Speaker Nancy Pelosi and Treasury Secretary Steve Mnuchin on Sunday said they were open to restarting COVID-19 aid talks, and Trump took executive action on unemployment benefits. Against a basket of currencies, the dollar was a fraction firmer at 93.39, just above a two-year trough. The dollar was a little steadier on the yen. It's 5.75, well above the recent low of 4.17, but facing stiff resistance at 6.46. Investors were wary of the fresh flare-up in Sino-U.S. tensions, with trade talks scheduled on August 15th, even as Washington imposed sanctions on senior Hong Kong and Chinese officials. Any breakdown talks which tend to benefit the dollar and the safe haven Swiss franc at the expense of the Japanese yen and commodity currencies such as the Australian dollar. On the data front, the United States has consumer prices on Wednesday, retail sales on Friday, which expects to show a solid bounce in spending, albeit before the latest round of social restrictions took some steam out of the economy. A raft of Chinese figures is due this week, which is forecast to show a continued growth, recovery, while EU production data is also expected to please. Data showed Chinese factory deflation eased in July, driven by the rise in global oil prices, and industrial activity climbed towards pre-coronavirus levels. And then moving on to gold. Gold dips, I should say, as the dollar holds on to gains and the U.S.-China spat in focus. We referenced that part of the move also is not only the currency, not only the U.S. rates, but also to a certain extent geopolitical concerns. Gold prices fell on Monday as the dollar held onto the gains after better than expected U.S. payrolls data, while investors kept a close eye on Sino-U.S. trade relations ahead of trade talks. Spot gold was at $2,029 per ounce. Gold futures rose 0.6 to 20.39. Gold hit a record of 20.72 on Friday before retreating nearly 2% as the dollar bounced on the data showed U.S. farm and non-farm payrolls increased by 1.763 million jobs. The stronger dollar narrative is weighing on investors' decisions, along with the fact that people will be more prone to profit taking after such a big run-up, said Stephen Ennis, A correction is very possible here. Really depends on the market's views overall. The U.S.-China trade escalation is sort of favorable to the dollar. The dollar has on occasion been the favored safe haven amid flare-up in tensions between Washington and Beijing. Last week, Trump took steps to ban two popular Chinese apps. There is room here for people to unwind some of their gold exposure, said Daily FX currency strategist Ilya Spivak, since it appears the Federal Reserve might start to take their foot off the gas on the aggressive stimulus after the recent better economic data. Speculators reduced their bullish positions on COMEX gold and silver contracts in the week to August 4th. But gold's appeal as a safe haven has been underpinned by the uncertainty driven by the COVID pandemic, which results in widespread gold stimulus, also fueling concerns of inflation. In the U.S., which has a market marked a grim milestone as 505 million cases, Trump signed executive orders on Sunday, partly restoring enhanced unemployment payroll payments to the millions of Americans. So we'll see what happens there. With that, we'll go on and move into the analysis. So the euro closed on Friday, engulfed the prior two sessions. Support will be 17.17. You can see that right here, with resistance at 18.47. So kind of middle of this area that we have for support and resistance. And moving on to the cable. Cable's body on Friday engulfed the bodies of the entire week. Look at that. You see here, because it right here, Friday, Tuesday, Wednesday, Tuesday, Friday, Thursday, Wednesday, Tuesday, Monday. So you can see these bodies were all engulfed by Friday's close. So Friday engulfed the bodies of the entire week. Support will be 29.54 with resistance at 31.11. And we'll take a look at that on the 2-hour. So we're looking at 29.54 to 31.11. Just like the euro, we're kind of smack dab in the middle of this, although really a little bit closer up to this upper area you can see here. And it's actually on this bar, actually comes in at 31.17. So we'll adjust that to 17 on the 2-hour chart. Hmm. Also appears to have begun a correction mode. Initial support is going to be 71.20, followed by 70.91. Resistance will be 72.07. And you can see the 71.20 here. Actually, move this a little bit lower there. Actually comes in at 71.18. So the Kiwi closed the week sub 66 for the first time in 3 weeks. And look at that, pretty long time, that range that we stayed above 66. Support will be 65.61, followed by 65.32. You can see 65.32 down here. Resistance will be 66 cents even. And you can see right here coming across, but I'm almost more likely, like I said, I think that to go on list of 65.32, we'll put it like this. I think the 65.61 will give a brief bit of support, but I think we will get down there to 32. So let's do it like that. There we go. Yeah, moving on to the dollar CAD. Dollar CAD posted a solid close on Friday. You can see that right here. Resistance will be 34.22 with support at 33.31. You can see here on the 2-hour chart here, already had a pretty decent little run. And you can see here where I'm coming out with that resistance. Could potentially push a bit higher. Actually, that can go up as high as 34, 33. Let's go and move that a little bit higher. There you go. So the dollar peso is trading within a confined range. Resistance will be 22.58 with support at 22.20. So relatively tight range in here. You can see here 22.20. Right up here is the 22.58. So pressing right up here in that upper range there. Take a look at it on a 2-hour chart. You can see up here at the upper area here at 22.58. Well, within this tighter range, you can see the 22.54. We just bunched above it, but if they're going to press it, it's 22.58. And same thing if they hit some stops, your risk down here is 22.20. I don't want to put the support here at 22.30. If we do slip down, at least this is where the real true support is going to go on coming here, 22.20. A little bit of support coming here at 22.26 overall. But that would be the make or break here for 22. They could come down here and test, but 22.20 is your real support. And moving on to the dollar yen. So the dollar yen has spent the majority of the prior week in a 75 pip trading range. Downside support is going to be 532 with resistance at 607. We had that resistance from Friday. Basically, that top ticked it. And a daily close above 647 would be needed for a sustained upside move. So we're going to go in and keep that resistance at 607, which we had for Friday. Can they bust above it? I guess they can, but once again, the real trigger for any up move is a 647. And downside support we have is for 532. The dollar index closed above 93.17, allowing for a short-term bottom. You can see here the key right here, this 93.17 zone here. Key resistance ahead is going to be 93.91. You can see that right here, with support at 92.89. Still bearish. And with that, we'll go move into the cross rates. So the Kiwi Yen closed sub 70 for the first time in a month. You can see here, similar to the move we talked about with the Kiwi itself. For the first time in a month, immediate support will be 69.41, followed by 69.17. Resistance will be 70.43. Similar like that with the Kiwi also. Is that I think that ultimately we will pull down or push down to 69.17 for right now. And we are here, that's still 69.41, still almost 40 pips away. So we'll keep that one here. With resistance to 70.43. And on to the Euro Yen. The Euro Yen, after posting a hanging man on Thursday, closed to closed sub 2,500, thus allowing for a test of 24. Immediate support will be 24.33, with resistance at 25.20. Obviously, still bullish, without a doubt. And on to the Euro odd. The euro has attempted to break 65 cents without any follow through. Resistance is going to be 65.09. We supported 64.06, followed by 63.64. And take a look at the Euro Kiwi. The euro New Zealand has been on a steady climb for the last 2 weeks. Key resistance level is going to be 78.80. You can see that right here. Try and break that. We've tested above it a couple of days ago, or actually I should say Thursday, unable to sustain a move above that, came back down, but recovered well on Friday, and we're just kind of stuck in a very, very tight range. So key resistance is going to be 78.80 with support at 76.84. And on to the Aussie Yen, which is still remains up here in the stars. The Aussie Yen, after a 5-day rally, was turned away at key level 76.35. We're still a bit weaker, but in a very, very tight range. Immediate support will be 75.19. And resistance will be 76.35. And on to the guppy. So the guppy spent the prior week pressing against the 39 level you can see right here. We actually jumped above it on Thursday, but we weren't able to go in and sustain that move. The pair appears ready for a respite. Support will come in at 37.36 with resistance at 39.29. And you can see here we're just hanging around here, but we've had a pretty good little run, so a little bit of a dip. Although, as you know, the pound's been fairly, not only strong, but even over the last couple of days, has retained its firmness. So could see one little pop here, but nonetheless, it's certainly open for a bit of a respite. You can see here back down here from 35. Here we are, 300 and nearly 350 pips off of those lows. So potential respite down here is certainly within reason. And then moving on to the sterling odd. So the sterling odd posted a bullish engulfing bar on Friday with a potential move to resistance, which would be 83.03. You can see here, pretty good little move here on Friday after this dip. So we're looking at 83.03 with support at 81.74. And that'll take care of the FX. And just taking a quick look at some of the equities, and these are the key equities for the NQ. One of the things you can take a look at is this stalwart move that we've had in Facebook. But you can see on Friday, this is on a daily close, we finished with, it wouldn't be a shooting star because the wick would have to be very, very high. Probably a little bit higher than what you'd consider a gravestone doji, certainly, but look at this. Certainly it would look potentially vulnerable here. We'll take a look at some of the others on the daily. Netflix continues to ride this trend line here. So once again, like I said, we closed lower on Friday. There is a potential. You just want to keep an eye on it that we could see some weakness in equities. And even if you don't trade equities or you don't really pay much attention to the NASDAQ or the S&Ps, certainly this could have an impact on the dollar and to a lesser extent also, gold market. Let's take a look at Amazon. Same thing here. We've been pushing up against this 32.52 and kind of, unable to go on and push and move beyond that. Once again, certainly not bearish, but potential for a little bit of a pullback would certainly be warranted. Taking a look at Microsoft here on the daily. Same thing. The key thing is if we were able to go above the 216. 214 has been important, but your first initial break here would be this 209 if we slip back below that. Really, when we held this 200 here, it actually was 202. Really opened the door, and you can see how we jumped up here. This was on that TikTok news, and it's going to be key if they lose this 209, an area that you want to go and keep attention to. Apple, well, they're on their own run here, but look at this. This has just been a phenomenal run here. Look at that. From essentially 370 on up to 457 here. So we do have, this is called a harami. So potentially we could pull back. Key is going to be here, is going to be 432. Looking at Google on the daily. Not a whole lot, just sloshing around here. NVIDIA, which still has not had its earnings come out yet, looks almost hanging out there by itself up in here. You can see here, not bad on Friday. We tested both. This would be considered, like a medium-legged doji. You can see here, bulls don't have control, bears don't have control, but we closed here, and we closed with a lower close here, and it's already had a pretty phenomenal run. So potentially, same thing here. I think it's a bit vulnerable. Support would come in here around 430. So move for this to potentially for this to move lower. Take a look at Intel. We know that one after earnings had really taken a beating with that gap lower, so we're still much weaker. We have not been able to get back above $50. We had made a move initially on that gap, but on this pullback down, we have not been able to move it. And then we already mentioned Netflix here. So something to go and keep an eye on. And thanks for joining us here on the European crossover.